What's up, guys? Bryan Lebo here with your February Las Vegas market update video. Well, let me start off by saying that things are looking absolutely wacky out there right now. Normally, January is a relatively slow month, and most buyers don't thaw out till mid to late January. This year, buyers just came out swinging the first week of the month. As a result, I really think that this year is going to be borderline nuts come spring, summertime. But before I explain why I feel that prices could drastically climb this year, let's first go over the typical metrics and find out what happened last month. Okay, first up is last month's sales. We managed to sell 2,103 homes in January. This was an incredible 25% increase over January of last year in 2019, when we only sold 1,680 homes. Now, in the last decade, there's only been a couple of Januaries when we sold this many homes. Now, either way you look at it, January was a very strong month for sales. Okay, next is everyone's favorite topic, median home prices. As you can see on the screen right now, last month we actually dipped about 3% all the way back down to only $300,000. Dropping $10,000 in just 1 month is pretty huge and really difficult to overcome, which is ironically the complete opposite of what happened to us last January when we jumped $10,000 in January. I mean, yes, $300,000 is where we were last year. So now, from purely a statistical statement, we are now 100% identical in value to this exact same time last year. Put another way, as of right now, home prices have not increased since this very same time last year. Put even more simply, this entire decade, we haven't had a year where prices were flat for an entire year. Okay, now let's check out our inventory levels. As you can see now, we ended January with just over 5,000 homes on the market. This was a decrease of just over 13% from December's inventory levels. Right now, this is the most important metric to pay attention to. As of right now, inventory has dropped 32 out of the past 34 weeks, 32 out of 34. We started at 8,000 homes, and spoiler alert, as of today's shoot, we're actually now below 5,000 homes. At this rate, by summertime, we'll have half of the inventory we did last summer. Now, I can't explain just how important this metric is to pay attention to. In a couple minutes, I'm going to explain why. Now, normally I take this moment to break down our inventory, but frankly, it's just like the same old song. About 98% of the market are normal or traditional sales. Only 2% of our market are short sales and foreclosures. So honestly, let's just not even bother getting into that one today. What I do want to spend some time on is, where the hell are we going? It was almost a decade ago that I came out with a video explaining legislative changes that were going to slow down and halt foreclosures. Now, in that video, I explained that if this law were to pass, we would effectively kill our inventory levels and therefore run out of homes to sell, since everything back then was a short sale or a foreclosure. I said then, by spring, summer, we'd have a feeding frenzy and prices would go through the roof. Now, immediately after I released that video, people thought I was insane for making such a bold prediction. But it turned out that in October of 2011, in that same video, I essentially predicted the bottom of the market. That spring and summertime, prices did go through the roof, and so began the beginning of cash investors really just buying up everything they could. Well, here we are 9 years later. The circumstances couldn't be more different, however. Foreclosures are long forgotten, as we just talked about. Investors have, slowly walked away from Vegas, and overall, our market is just very healthy. But trouble's on the horizon. Okay, maybe not trouble, maybe that's not the right word, but changes. That's more accurate. See, the same analogy of supply and demand that I used 9 years ago is still very much relevant today. As I mentioned last month, a so-called balanced market consists of a 6-month supply of inventory. Right now, we only have about a 2-month supply of inventory. At the rate we're going, come March, we'll have about a 6-week supply of inventory, and by May, we might be down to only 4 or 5 week supply. So first, let's revisit economics 101. Supply and demand. If supply is decreasing and limited and demand remains steady, prices have to rise. I think we can all agree on that rule. Typically, prices see the majority of their increases during the spring and summer months. Well, considering our current trend of decreasing inventory, the law of economics states that soon prices will have to increase if the demand remains steady. Well, last month was a banner month for clothes sales, and I can tell you personally that the phone was ringing off the hook immediately into this new year. So I'm kind of all but guaranteeing sales will be brisk this month as well. So if supply, or in this case, inventory, is shrinking and demand is increasing, it doesn't take a genius to see what's happening here on the near horizon. Just this past week, I listed a home and had multiple offers on it. The winning buyer had to agree to pay $25,000 over the appraisal if it didn't appraise. Now, that hasn't been typical in a very long time. Some of my listings that sat, longer than they should instantly had multiple offers on them last month. Right now, the word really hasn't gotten out yet. Nobody is discussing the shortage of inventory at all right now. Therefore, buyers out there don't even have a clue what they're getting into until they start losing homes and realizing just how competitive the market really is. But soon, the word will get out. See, while it would be great to live in a world that's rational, we just don't. Anytime the market is rapidly increasing or decreasing, people make emotional decisions. This is what leads to hyperappreciation or hyperdepreciation. It's very much fear-driven. People are either scared of being priced out or scared of losing money in a down market. Once buyers get into bidding wars, they tell their friends and family, who then tell their friends and family, and soon the local news is telling the same story. I'm telling you right now, this is going to happen within the next few months. A 2-month supply of inventory is very much problematic. The worst problem is this. How do you create inventory then? The obvious solution is either one of two things. Either prices rise too high and therefore, the demand has to decrease, or inventory increases to therefore meet demand. Well, rising prices are obvious, but how do you create inventory? You create inventory by motivating homeowners to sell their homes. Well, here's the problem. The delta, or for non-math nerds out there, the difference between new and used homes has never been higher. What this means is that for the normal homeowner to sell their home and simply purchase, the exact same type of new home, that can spell hundreds of thousands of dollars more for them. With the advent of master plan communities, neighborhoods really haven't gone down like they used to in the past. So if you love the location you live in and love your neighbors and love your floor plan, why would you spend, say, $300,000 for a new home when you could just spend $50,000 or $100,000 by remodeling your existing home? More and more people are simply refinancing their homes and just staying put. So if people aren't willing to sell their home, you simply can't create inventory. This example is even more pervasive on the low end of the market. In Summerlin, for instance, the cheapest brand new home you're going to find is still going to run you about $600,000 once you actually move in. Now, that same size home is about $400,000 on the resale market. So now for a second, imagine the person who actually owns a $300,000 or $400,000 home. There's simply no new option for them. This is the main reason why I don't see our inventory changing directions at all, really. The counter to my argument is that during the spring and summer months is when people typically make their moves. While this is true, buyers also purchase 50% more homes than they are right now. So even if more people do list their home for sale, which will happen, there's also going to be more buyers making those out-of-state moves with their family, therefore absorbing all of that additional supply. So to wrap this up, who knows what's going to happen after the election? I'll let the political pundits argue that one all day long. But first we have to get to November. And by the looks of things, this spring and summer is going to really get interesting. Now, if you're looking to downsize, sure, just wait for summer, maximize your sales price. But if you're looking to upgrade your home, just remember, people make this mistake all the time. If your current and less expensive home goes up, say 10%, so is that new, bigger, more expensive home that you want to buy. So waiting for the right price might end up costing you more in the long run. If you're simply looking to get in the market for the first time, I'd say you better get aggressive really quick. The longer you wait, the less you'll get, and certainly on worse terms as the competition heats up. Well, that's it for February, everyone. Thank you so much for watching. Please be sure to subscribe, and I'll see you all next month.